This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, November 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here. December corn up a penny at 436 1/4. January soybeans are up 7 3/4 at 1141 1/2. And December Chicago wheat was down a penny 3/4 at 534 1/4. Government's open, and we've got some export sales here this morning. This is through week ending 9/25. Corn sales reported at 1,394,800. That was kind of at the lower end of the range there on the corn side. Beans were 870,500, also kind of mid-range. On the wheat side, 315,900. That was low end of the range. In the meal complex, with cancellations of 216,200 for old crop. Looks like they moved into the new crop. 623,500 for 26, which was well above the top end of the range. On the oil side, 3,900 for old crop, 9,700 for the new crop. Both numbers were in line with the estimates. As I mentioned, USDA is open for business. We're going to get a report tomorrow. And we're looking overnight here this morning, but we're bumping into some pretty key technical levels as we head into the report, given the overnight market. So I guess with that, Dustin, maybe a few thoughts here this morning, and then we'll throw around the room.
Hey, good morning, Dan. Yeah, you said some key technical levels, and I have a chart actually today. So Jason brought this to my attention yesterday. I'm not big on trading technicals, but there are some big numbers here that we're crossing against, and a lot on the screen, obviously, but that purple line is the 200-day moving average. And then that middle red line is the 50% retracement from the calendar year high to the calendar year low. So those two numbers are matching, and as of this morning, we're above them. So, again, it's not necessarily magic that these numbers mean anything, but you just think about putting 200 days of positions underwater all of a sudden for corn. There is a chance that we come above these levels and we find some more short covering. So kind of a critical level. It's also the fact that we're going into a very critical report. We haven't had a report in a couple of months. So just something to think about. I mean, we've got maybe some fireworks here the next week as we come through this report.
Sure. I guess what your thoughts, I think that, as we've gotten private estimates and things like that, I think everybody's pretty resound to the fact that we get a reduction in corn and bean yields. I guess the argument's going to be where is it at? And so I guess what's your take, Dustin, as we head in to tomorrow? Yeah.
So, I think I've heard a lot of yield estimates. I've heard a lot of my yields are good, but a lot of people in my area are down. It would make sense that we are in an echo chamber. The guys that are investing in 2 rounds of fungicide are also probably using a service like ours. And so fungicide was obviously a good investment for Iowa this year. I don't think there's any arguing that. So it's a very hard thing to estimate, but from what we've heard, I don't think that, especially as you got late in the season, late yield and final yields for corn, I don't think that the disaster is out there like a lot of people would be calling for. I think the average of estimates actually make a lot of sense. A 184 number, I think somewhere between 180 to 184 would not surprise me. What I don't think is currently being accounted for is, that we had so many acres. And there's actually, Justin and I were talking about this yesterday. There's someone that tweeted this pretty well. Eastern basis has been pretty good, and Western basis has been very poor compared to the last couple of years, right? So it's just a displacement of where these bushels are, but you still have access to the river system, and we have tremendous demand right now. But like, what happens when we still have to reconcile a 2 billion bushel carryout? What's a fair price for corn? What's a fair price for spreads? In the short run, if you're just not getting enough flow in those usage centers, that would make sense why we're seeing some of this market action, some of this basis action. My worry would be, maybe a bit longer term as you get into like JFM, like, do we really need to go price ration? I don't, unless we're going to like just completely outcompete Brazil this entire time against what appeared to be a record safrinha crop. I don't know how we're not going to run into a wall of corn if this report says anything above 182 today or tomorrow.
That's good stuff. Justin, what are your thoughts?
Yeah, I mean, we're hitting some good technical areas as we talked about. I had a lot of conversations yesterday, and this could be a report that you fade, good or bad. Just kind of it's like there's a lot of people on the sideline, like everyone kind of sees the same things where, however you want to say it, coiling, where, buying breaks, selling rallies, it's been in this range, it's at key levels. I think everybody's looking for, new information to decide, what the next move is. Beans as well took out the highs of the move. So everything technically looks really good. We're going into a big report. Like I said yesterday on the show, it's one of those where I feel like if I had the numbers early, I would find a way to lose money with the setup here. So I'm trying to be open-minded and, see what the numbers say and kind of reestablish my thoughts. But yeah, overall, I agree with Dustin. I am worried that the farmer is in the same boat, meaning that did basis contracts, stored whatever they could, wait to see how this, Trump tariff war pans out, how these deals pan out. I think there's a lot of people that are on the sidelines here. And for the farmer, that means a lot of natural longs. So cautiously optimistic on the price action, but I am concerned about what next. We get these numbers out of the way. There's still going to be a lot of bushels that have to find a home, have to be priced, all those kinds of things. So, and I do think we've talked about spreads a lot on here. If it is that we're just, whatever you want to call it, inflationary, commodities are back in flavor for index funds or managed money, and we just flat price continues to rally, I do think that could be problematic for spreads. So actually, I think the spreads get wider the higher we go. So that's my take.
Very good. And it's funny you mentioned that. I had multiple people talk to me yesterday about your comment on having the numbers, and the question was posed, if we're unchanged from September, because there's always it's like, because the one question was, how bearish is it if we're unchanged from September?
Pretty bearish. I think it'd be, the bulls will say, wait till January. We'll get the real numbers in January, but I don't think the market's it'd be not good. I think, yeah, it's what I said, like, this is one of those reports where you just have to be flat as a trader and just have to have bullets, as we like to say, right? You have to be, able to do something if you think something's out of whack after the report. Like, for instance, if it came out 184 and everybody got super excited, or 183, like I said, I think that could be a fade. If they go put, corn up 5 or 10, we broke out of the range, all those kinds of things. Or conversely, if it, was 184.5 and they put it down 20, it'd probably be a fade. So I'm trying to be open-minded here.
Yeah, that's fair. Ben, what's on your mind this morning?
Yeah, I think that identifying that we are at a real inflection point here The 200-day moving average, the most heavily traded price in 24. The point of control on market profile, which that indicates where the market has traded the most times, not necessarily the most volume, all around 436. You've got a top of a channel here that comes in right about where PLC is at. I mean, you can put your tinfoil hat and go on and on about what this area is, and I think it's come Monday or Tuesday morning. I think we'll be 10 to 15 cents away from this area. I think it either serves as an accelerant or it's punches corn in the nose as we head into first notice day. Interestingly enough, the orderly channel that started off of the lows, that comes in right around one of our most recent heavily traded prices, which is around 19. So you don't want to get, I think Justin nailed it. Like, you want to have some bullets. You got to be conscious of what can happen because of the amount of options, the percentage that they provide in the overall picture. I'd be really leery of a good close on options expiration and then watching the market fall apart from there. I think it was June or July we closed at 441, and it was nothing but down from there for a little while. So that being said, a little bit concerned on really, I haven't seen any guidance yet. It may be out there and how they're going to catch up on export sales. We got a week of it this morning, so you have to be concerned of getting a marginally unchanged yield and not guidance on how good demand is. That may give bears a little bit of fodder for a minute if that's not reflected in the demand numbers. So options are cheap, and it seems like that's the best way to play it from here. So
very good. Ryland, we got a couple minutes here. Big talk this morning in the livestock side on these reductions of tariffs from Brazil and what this is going to mean. Is meat going to be included? Is it going to be a coffee play? What that looks like. And, the hogs here for the next two sessions, are they going to hold Monday's lows? Because that seems like that's where we're trending.
Yeah, absolutely. I mean, it does kind of seem like this idea that we could see tariffs start to come off Brazil has been a fear that's kind of been in the market already. And we're still seeing a pretty heavy amount of liquidation in both cattle and hogs right now. I mean, open interest was down 2,200 contracts in the cattle, down almost 4,000 contracts in the hogs. So there just still isn't a lot of good news here to wrap your hands around. I mean, we had in the cattle side of things, December failed right at the 100-day moving average. So you've got this kind of weak technical picture. You've got you had a lower beef market yesterday, and we're starting to see cash sales still kind of trickling lower here. We saw some 227 earlier in the week. We saw some 225 yesterday, 357 dressed in the north. So just waiting kind of to see how the south is going to shape up and hoping that can be kind of the saving grace here. But overall, just the kind of news here and the sentiment is still pretty weak overall. And if the tariffs come off Brazil, I don't think we've baked that in entirely, but that has been a concern on this whole break, that this was going to be one of the mechanisms that the administration uses to get U.S. Consumer beef prices lower. So we'll see if that takes into effect or if that starts to get mentioned, but obviously the futures are going to stay pretty sensitive to the headlines here. So we'll be watching for that and more cash trade by the end of the week. So with the government being open, getting SNAP benefits likely in the hands of consumers, I think overall is kind of supportive in the longer term, but we're still just seeing the weak fundamental data here, especially on the hog side. You had cash down, new lows for the move at down 334. Got these big hills heading into the holidays, and just seeing carcass still kind of trickle lower here. So overall, it just seems like we really need things to turn around and just a little bit better of a sentiment, and on the fundamental side to find some kind of support. So,
since Secretary Rollins put out her last comments, was a week or so ago, Ryland, and it's been pretty quiet on Mexico. Have you heard any chatter?
No, that's it. It just kind of stopped all that talk. Once Trump kind of said that he would like to kind of expedite the reopening, and Rawlings had to kind of come out and cool that down and say, we got to work this out. Because obviously if there's a threat, screwworm is of real threat to the livelihood of these cattle. I mean, like you really just don't want that in the U.S. That's bad for everybody. So I think even though we want the border to reopen, it still may be something that is going to be more nuanced. And I think everybody's trying to figure out what the plan is. If it's going to be a phased reopening, if it's going to be just, hey, open the gates, let them come, and we'll deal with screwworm later, whatever. It's been really quiet though, this week so far, Dan.
Very good. I appreciate the update there. A couple of things to point out. Again, we'll have the USDA report out tomorrow morning. That'll be 11 o'clock Central. We will be back with a bonus war room at 11:15 to share our thoughts and comments on the report. So be sure to tune in there. Also, everybody's favorite time of the week, Fun Fact Friday. So we'll be looking forward to that with Brian here tomorrow morning. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. I want to keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We'll get a quick rundown here. Markets are open. December corn is up a penny and a quarter at 436.5. January beans are up 9 3/4 at 1143.5. And December Chicago wheat is up a penny at 536 3/4. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.